When it comes to dividend investing, there's always this battle between chasing the highest yield and finding something that feels a little more sustainable. And lately, two names keep coming up over and over again: WPAY from Roundhill and YMAX from YieldMax. Both of these ETFs are trying to dominate the weekly dividend conversation, but they take very different approaches to get there. Let's start with WPAY. This is Roundhill's latest innovation, and honestly, it's a clever idea. Instead of building one ETF around a single company or one theme, WPAY is more like a wrapper. It actually invests in Roundhill's own ETFs and then redistributes that income out to investors in the form of weekly dividends. Think about it like this: WPAY isn't just relying on one strategy, it's pulling from multiple Roundhill strategies at once. That diversification is what makes it stand out, because even though it's still very new, it doesn't put all of its eggs in one basket. On the other side, we've got YMAX from YieldMax. If you've been following the high-yield ETF space, you know YieldMax is one of the most aggressive players when it comes to these option income-style funds. YMAX works as a fund of funds too, but instead of Roundhill ETFs, it's built around YieldMax's own lineup. So basically, you're getting exposure to a basket of different YieldMax strategies, all inside one ticker. The goal is the same as WPAY: bundle different products, package the income, and deliver it to investors in a way that feels consistent. The big difference comes down to philosophy. Roundhill is a bit more focused on innovation and thematic ideas, things like tech, blockchain, or newer growth trends. YieldMax, on the other hand, is laser-focused on squeezing yield out of single-stock ETFs, often through option income. So when you're choosing between WPAY and YMAX, it really comes down to which style of income generation you believe in more. Do you like the idea of Roundhill's diversified themes and a more creative portfolio? Or do you prefer YieldMax's aggressive high-yield approach tied to individual stock strategies? Now, one thing that makes this conversation interesting is the weekly payout factor. Both WPAY and YMAX are designed for investors who don't want to wait months to see cash hit their account. That's a big psychological win. For a lot of income-focused investors, waiting 3 months for a quarterly payout feels like forever. Weekly dividends flip that on its head and make it feel like you've got a paycheck built into your portfolio. And that, more than anything, is why these ETFs are getting so much attention. But here's the thing: just because something pays weekly doesn't mean it's always the best choice for everyone. You have to think about sustainability, portfolio fit, and of course, the trade-off between risk and reward. WPAY is brand new, so it still has a lot to prove in terms of consistency. YMAX, while more established, still faces the same questions all high-yield funds do. How long can this last, and what's the cost to your long-term capital? Another angle worth thinking about is simplicity. YMAX is YieldMax's all-in-one product. It's their way of saying, if you don't want to pick between 10 different YieldMax ETFs, just buy YMAX and you'll get exposure to all of them. WPAY is playing the same game, but with a Roundhill's twist. It's their way of letting you tap into Roundhill's ecosystem without having to manage multiple positions. Both strategies make life easier for investors, which is why these ETFs are going to keep popping up in conversations. So if you're someone who values diversification across themes and wants to ride along with Roundhill's innovation playbook, WPAY is going to look attractive. If you're chasing pure yield and believe in YieldMax's model of extracting income through their lineup of single-stock ETFs, then YMAX probably feels more exciting. At the end of the day, both of these funds represent where the ETF space is headed. Investors don't just want growth anymore. They don't just want dividends every few months. They want frequent income, they want it packaged simply, and they want to feel like their money is working for them every single week. WPAY and YMAX are delivering exactly that, but in two very different ways. And here's the key takeaway: you don't necessarily have to pick one over the other. A lot of investors are experimenting with both, splitting allocations to see which one performs better over time. It doesn't have to be an either-or game. Instead, it's about asking yourself what role these weekly income ETFs should play in your portfolio, and how much risk you're comfortable tying to them. Because at the end of the day, income is only one piece of the puzzle. Capital preservation, long-term growth, and risk management are still just as important. Weekly dividends are exciting, but they shouldn't blind us to the bigger picture. So WPAY versus YMAX, two different flavors of the same trend. Roundhill's creative diversification, YieldMax's aggressive high-yield bundling. Both chasing the same goal, to dominate the weekly dividend space. And honestly, this is just the beginning. The fact that we even have a choice between multiple weekly pay ETFs tells you everything about where the market is going. Investors want more control over their cash flow, and issuers are delivering it. The question is, where do you stand? Are you team WPAY, team YMAX, or do you see a spot for both in your portfolio? Comment below, and if you found this video helpful, make sure to hit that like button, subscribe to Money Stick Unfiltered, and turn on notifications so you don't miss the next breakdown. See you in the next one.